Imagine this for a second. You step into the future of tech, right? And you're always equipped with the absolute latest gadgets. That cutting-edge smartphone, the powerful new laptop, maybe that sleek gaming console everyone's talking about. And here's the key part. Without that heavy sticker shock or, you know, that nagging feeling it'll be totally obsolete next year. Just access. Exactly when you need it. It sounds like a dream for a lot of us, I think. And, well, it's rapidly becoming a reality. We're talking about the booming electronics products rentals market. Today, we're taking a deep dive. Our source is a really comprehensive market research report. It's titled Electronics Products Rentals Market Trends and Future Opportunities, CMR. It's by Manjiri Khan here and was just updated July 2025. So our mission for you today, go beyond the headlines. We're going to try and uncover the true forces behind this market. It's like explosive growth. We want to understand who's really embracing this model and maybe peek into what exciting developments are just around the corner. Think of this as your shortcut, your essential briefing. To truly grasp this fascinating shift in, well, how we consume things and how businesses are adapting.
Exactly. And we're here to help you connect those dots. Because this deep dive, it isn't just about the numbers, is it? It's about understanding the underlying currents, the things that are reshaping our relationship with technology and consumption pretty much globally. We'll explore not just what's happening, but crucially, why it's so important in the bigger picture.
Okay, so let's set the stage a bit. When we talk about the electronics products rentals market, I mean, maybe you picture renting a projector for a presentation or maybe a gaming console for a weekend bash. But how broad is this market really? Is it just about short-term stuff?
Oh, it's far more expensive than you might think, much broader. This market actually includes both short-term rentals, yes, but also long-term leasing, and it covers a huge spectrum of devices. Sure, the familiar consumer electronics like smartphones, laptops, gaming consoles, they're in there, but it also extends to highly specialized professional equipment. We're talking sophisticated audiovisual systems for big events, industrial-grade machinery, even cutting-edge medical devices for temporary use. It's a remarkably diverse landscape. Really shows the breadth of this whole access over ownership idea. And what's truly insightful here, I think, is how perfectly this industry fits into the broader subscription economy. It's a global shift, really, prioritizing the usability, the functionality of something over actually owning it outright. When you apply that to physical electronics, it's about minimizing that financial hit, and also dodging the rapid depreciation that just comes with owning tech today.
Right? Things get outdated so fast. So, okay, we're seeing this massive shift. What are the core factors really pushing this growth right now? Is it just about saving money? Or are there like deeper things that play here?
Well, the report points to a combination of powerful drivers. Firstly, yeah, the cost, the really
Yep.
high upfront cost of buying the latest electronics. That's a major barrier for many, so rentals look attractive. Secondly, as you said, the rapid pace of technological obsolescence. I mean, devices become outdated incredibly fast. Owning them can feel like a losing game sometimes. Your
Yeah.
investment just drops in value so quickly. But beyond the money stuff, there's also this growing global awareness, a demand for more sustainable ways to consume. People are increasingly conscious of their environmental footprint, and they see rentals as a way to participate in a more circular economy. These aren't separate things. They're sort of creating a perfect storm that's really changing how we relate to our tech. And just to put some numbers on that, Cognitive Market Research says that in 2024, the global market was valued around USD 66,152.6 million. But what's really striking is the projection. It's expected to surge to nearly USD 160 billion, 159,169.7 million to be precise by 2032 or 2033. That reflects a pretty robust compound annual growth rate, a CAGR, of about 11.60% during that forecast period.
Wow, 11.6% CAGR.
Yeah.
That's huge growth. But, with economic uncertainties floating around, could that be a bit optimistic or there may be factors that could even push it higher than that forecast?
The report seems quite confident, actually, about the sustainability of this growth, and that's mainly because it's driven by these fundamental shifts in how both consumers and businesses behave. Take Rent-A-Center, for example. They're a big player in consumer electronics rentals, right? They've been a pioneer introducing these innovative subscription models. They let users seamlessly upgrade their devices, and that directly tackles those two core drivers we just talked about. It gives affordable access and ensures users always have up-to-date tech. That's a really powerful combination for keeping the market strong.
Okay, so we get the why.
Mhm.
Let's zoom in a bit now. Who's actually doing the renting? Who's putting these trends into practice? Is this shift happening equally everywhere, or are there specific groups leading the charge here, renting versus buying?
Yeah, it's definitely not uniform. Both corporates and individuals are driving it, but often for different reasons. So on the corporate side, there's huge demand. They need temporary access to high-performance electronics for specific things. Think events, conferences, project-based work. Imagine a company needing, say, hundreds of VR headsets just for a short-term training program, or high-res projectors and complex computing systems for a big summit. Renting just optimizes their costs and, crucially, mitigates the massive investment risk of buying specialized gear they might not need long-term. We've seen a really noticeable jump in audiovisual equipment rentals, especially for these global hybrid events. That tells you a lot about remote collaboration's impact.
That makes total sense for businesses, especially needing specialized stuff temporarily. But what about individual consumers? Is it really catching on there? I mean, don't most people still kind of want to own their personal smartphone, their laptop, their gaming console? Well, what's maybe the biggest hurdle for everyday people to switch to renting, and how is the market trying to get over that?
That's a great question, and it really touches on a fascinating psychological shift that's happening. While, yeah, ownership is still a strong pull for many, there's undeniably strong growth in the consumer segment, especially among younger generations, millennials and Gen Z. For them, it's often less about just, not having the money. It's more about valuing flexibility, conscious consumption, and avoiding that feeling of digital clutter or watching something they bought depreciate so fast. The idea of being tied to an expensive, rapidly aging device, it just holds less appeal for them. And this demographic shift has really fueled the development of these slick online platforms and apps. They offer really seamless rental experiences now. Companies like Grover over in Europe or Rentomojo in India, they're great examples. They offer subscription access to electronics, even home appliances sometimes, and they often sweeten the deal, right? With attractive terms like free servicing, maybe even damage protection. That helps address some of those initial worries people might have compared to owning. So yeah, we're seeing significant uptake of smartphones, gaming devices, wearables, all in this consumer rental space.
Interesting. So looking at the types of rental services then, what's most popular right now? Are there specific devices or maybe rental lengths that are really dominating the market?
The report highlights that short-term rentals, especially for high-end consumer electronics, the latest smartphones, laptops, gaming consoles, those are particularly popular. They're expected to hold the largest market share in 2024, something like 45%, which points to, well, the immediate usefulness and the high turnover of those personal devices. Then you have the professional electronics rental market.
Yeah.
That includes things like projectors, audio equipment, medical devices. That's also substantial, expected to be around 35% of the market. And that's clearly driven by industries like events, healthcare, education, where you need specialized equipment, but maybe not all the time.
Okay, and are we seeing big differences region by region? How is this market being adopted differently around the world? And what does that tell us about broader trends, maybe?
Oh, absolutely. Big regional differences. In 2024, North America was leading the pack, accounting for roughly 40% of the total revenue. That's not just because of strong IT infrastructure, though that helped. It's also high consumer awareness and, frankly, an earlier adoption of subscription models in general. Europe followed pretty closely, around 30% market share. And there you see eco-consciousness playing a more significant role. Rentals align really well with sustainability goals, circular economy ideas. But the Asia-Pacific region, that's the one to watch, really. It's emerging as the fastest growing market, projected EGR over 9%. That surge is fueled by rapid digitalization, booming e-commerce, rising disposable incomes in places like India, China, Japan. It suggests that as more people get access to tech, many are choosing access over outright buying from the get-go. The competitive landscape is also pretty dynamic. It's highly fragmented, lots of players. But there are some established names, companies like Rent-A-Center, Radio Rentals, Meeting Tomorrow. Together, they held about 37% of the market share back in 2024. These guys leverage their existing brands, the networks, and they're constantly investing in customer service, tech advancements, trying to stay ahead in what's a really fast-moving space.
All right, it sounds incredibly fast-moving. But with all this rapid expansion, it surely can't all be smooth sailing. What are some of the key challenges? The potential obstacles facing this electronics rentals industry that could maybe slow it down?
Yeah, that's a good point. There are definitely hurdles. A major concern for the rental businesses themselves is the high maintenance cost, especially for these high-tech electronics. These devices need regular servicing, repairs to make sure they work perfectly for every single user. Think about laptops, cameras, AV equipment. They can rack up significant repair costs just from normal wear and tear when multiple people are using them. It's not a small expense. You can really bite into profit margins if it's not managed really effectively. Then there are the logistics, which are just incredibly complex. Imagine managing huge inventories, coordinating deliveries on time, streamlining returns efficiently. across potentially millions of devices. It's a very resource-intensive operation. Huge. And on top of that, the industry faces this constant pressure of rapid innovation. Consumers want the newer, more advanced stuff, so rental companies have to constantly refresh their stock, which means significant capital spending.
And what about the really tangible risks? Like what if someone damages the product or it gets stolen? How do companies handle that? And does it affect the person renting?
Yeah, those are crucial financial risks, absolutely. Product damage, theft, it hits the company's bottom line directly. So to counteract this, many companies offer insurance options, which is good for the business risk, but it can, in turn, increase the overall cost for the renter, which might make the service a bit less appealing, potentially. Another challenge is just maintaining competitive pricing while still being profitable, especially with new players always jumping into the market, maybe driving prices down. And we're also seeing some unique operational challenges pop up with the growth of digital rentals, things like streaming accounts or gaming platforms. Less tangible, but still needs managing. Ultimately, I think success in this market really hinges on making the whole rental process smooth, streamlining it, and ensuring customer service is impeccable, absolutely seamless. Without that trust, hitting those big growth projections, that becomes incredibly difficult.
Okay, so let's pull out the crystal ball then.
Yeah.
As technology just keeps racing ahead, where is this electronics rentals market ultimately headed? What are the big innovations maybe coming down the line that could really reshape it?
Well, a significant advancement we expect to see more of is the widespread integration of IoT Internet of Things capabilities right into the rented devices themselves. This isn't just about tracking where it is. It'll provide real-time data on usage patterns, location, even the physical condition of the device. What that means is vastly improved operational efficiency, predictive maintenance, knowing when something might fail, and a much better way to manage and reduce risks like damage or theft before they become big problems. And we're already seeing early examples. There's a company in Romania, Telerenta. They launched something called Rentbox back in May 2023. It's basically an automated platform for renting and delivering electronics like TVs straight to people's homes. It's fully digitized, very flexible. It really shows how IoT and automation are starting to streamline both the user experience and all the back-end management stuff. Beyond that, look at predictive analytics and AI. Artificial intelligence. As they get more sophisticated, they'll allow much more accurate forecasting, predicting demand for specific devices. That's going to be transformative for inventory management. It'll significantly cut costs linked to having too much stock, or just as bad, not having enough of the popular items when people want them.
And how will some of the broader tech trends, like say the rollout of 5G and just faster internet everywhere, how will that accelerate this shift towards rentals?
Oh, the growing ubiquity of 5G and faster internet, that's a massive accelerator for demand, especially for high-performance rental devices. Think about what you need for seamless gaming, high-fidelity entertainment streaming, or really intensive educational apps. It requires power. So this directly fuels the rental market for things like gaming consoles, advanced VR headsets, powerful laptops that can handle it all. And as cloud computing keeps expanding so rapidly, we also anticipate companies might start offering rentals of virtual hardware that would allow businesses, maybe even individuals, to access incredibly powerful computing systems on demand without needing any physical machine themselves.
Interesting. And flipping back to sustainability for a moment, how does that growing emphasis on environmental responsibility play into the future of electronics rentals? Is it just a nice bonus, or is it becoming a core reason people choose rentals?
I'd say it's absolutely becoming a core driver. That growing consumer focus on environmental responsibility, it's creating real demand for devices that are energy efficient, easily recyclable, or fit into these circular economy models. And rental services are, well, uniquely positioned here. They can make a really substantial contribution to reducing electronic waste or e-waste by making sure technology gets reused by multiple people and then ultimately recycled responsibly instead of just ending up in a landfill. Rentals become a powerful tool for corporate social responsibility, for CSR initiatives. It's not just marketing spin, it's becoming a fundamental value proposition for a lot of consumers and businesses.
Wow, what a fascinating deep dive into a market that feels like it's truly changing things. So, just to quickly recap for everyone listening, the electronics products rentals market isn't just growing, it's really poised for significant expansion. It's being driven by tech advancements constantly, the smooth integration of digital platforms making it easier, and this fundamental shift in how we as consumers think, moving towards temporary access to high-end stuff rather than feeling we have to own it outright. And this flexibility, it clearly benefits both sides. It reduces the financial hit for us consumers and lets companies reach way more people across different industries, healthcare, education, events, without huge upfront costs.
Precisely. That sums it up well. And while the market definitely has to navigate those operational hurdles managing maintenance, the complex logistics, the risks of damaged future success really does hinge on strategic innovation. Companies that invest heavily in integrating IoT, using AI for optimization, and, crucially, embedding sustainability right into their core practices. They'll be exceptionally well positioned to lead this market going forward because, as consumer needs keep evolving and technology keeps marching relentlessly on, adapting is absolutely key to staying competitive long term.
Yeah, it feels like this shift is maybe more than just convenience, doesn't it? It makes you think. What stands out to you listening about this move towards renting rather than owning our tech? Perhaps it's not just about the cost savings, but maybe a fundamental reevaluation of what ownership even means in a world where tech changes so incredibly fast.
Yeah.
Could we be witnessing maybe the dawn of a new era of consumption, where the digital and the physical blend seamlessly and access truly, finally, trumps possession?